All right, here to educate us on all of this banking news, all these bank collapses that have happened. He was telling me off air about two other ones that went under the radar. I know nothing about any of this. Luckily, we are fortunate enough to hear from this man. He's the current reporter for MNI Market News. He's also the host of the FedSpeak podcast. You can check it out wherever you get your podcast. And that's Pedro da Costa. Pedro, thank you so much for hopping on the podcast with me.
My pleasure. Thanks so much for having me.
So, Pedro, I reached out to you because there's just a bunch going on in this space. And one of the goals that Nick and I started out when we started Can We Please Talk was really to inform and educate, right? I'm a former news producer. Nick works in education with a bunch of a bunch of school districts throughout the country. And we want to educate from our subject matter expertise. I know nothing about the banking system, nothing about it, and nothing about the latest news that has happened with a few of these banks that have gone under and are now under FDIC control, if I'm even saying that correctly. So, can you give us a 30,000-foot overview for the people that maybe don't follow finance news, like myself and others? Seeing a bank like this go under, what are some of the main points that people should understand about all of this?
Absolutely. And I can relate to that perspective of a layperson because I came into, I've been doing this for 20 years now, but when I came into it, I was a political science major with little economics background. The numbers didn't add up to me. So I had no idea what a financial crisis was and what monetary policy was or what the Fed did or any of that. So I guess, what specifically happened at SVB is that it seemed to be a pretty poorly managed bank. And they just made some bad bets on, they're trying to earn extra returns on some bonds that turned out to go the other way, basically. Financial markets are, to explain it in the regular person's terms, it's not unlike a casino. And if you make your bet and the market goes the other way, you could lose your shirt. And in SVB's case specifically, people started to spread rumors that the bank wasn't doing well. And that led to a classic run on the bank where people started to withdraw their deposits, except this time, because we live in a digital world, it happened at record speed. And people managed to withdraw as much as $42 billion just in one night, one 24-hour period. So it's kind of an unfathomable sum if you think about how long it would take for people to actually line up and get that kind of cash. So that's essentially what happened. And the implications seem to be pretty widespread because it hasn't stopped with SVB. And now the problem seems to be in Europe, and people are worried about the health of Credit Suisse. And having covered the 2008 crisis, when things start to spread like that, it seems like it's going to take a while before this is over. And there's going to be other, firms that run into trouble potentially.
Well, that's not good to hear, Pedro. So we're starting off on a bad note right there. I wanted to read.
I apologize for being the bearer of bad news, but I'm just reporting the facts.
No worries. And that's the great part about this. The different journalists that we have on that have the subject matter expertise or are covering something. You have such a long tenure in covering this. I wanted to read something for you that I saw last week from a CNN report, because I would love for you to break this down for us. So CNN reported last week on SVB that it had sold a bunch of securities at a loss and that it would sell $2.5 billion in new shares to shore up its balance sheet. For a literacy moment for our audience out there, can you explain that in layman terms and what that means?
Sure. That's a challenge because the jargon is deep, but I guess they were basically trying to raise new funds to support, to make clear that they were a strong bank that could support the deposits that were being withdrawn. They were trying to basically stem the run on the bank that was occurring at the time by getting a new influx of funds. But instead, it actually had the opposite effect. It sent a signal that hey, we actually are in trouble and the rumors are true. And so therefore people, it exacerbated the condition of the bank and people started to take their money out of SVB, even more rapidly. What happened over the weekend was that because of the fear that this would happen at other regional banks whose stock was being battered in a similar way, you're talking about stocks that were down 70% on the day and down from 130 something to 20 something over the last 2-3 weeks. Some of those. So what happened was the Federal Reserve and the FDIC basically bailed out the uninsured depositors, people who hold funds over 250,000 in their account at SVB and Signature Bank, while closing the bank and allowing banks to borrow at cheaper rates in order to fund these potentially bad bets on treasuries. But it remains to be seen how long that's going to work and whether that's going to stem the pain that we're feeling so far.
I wanted to follow up on that because you kind of fed into a little bit of what FDIC is doing. I want to get into the Biden administration and the federal response to all of this. Do you feel it's been adequate enough? A lot of people are pointing to the policies under the former President Donald Trump and his administration, and something that they enact legislatively that maybe was part of the reason why this happened. Do you know if that is true? And also, what has been the response on the federal level from President Biden? Do you feel like they're doing an adequate enough job to respond to this crisis and helping the American people that do have money with this bank?
To be honest, I cover the Fed and monetary policy so closely that it's like not really my place to judge the Biden administration's, response. I mean, he's been out there. He spoke about it. He said deposits are safe and made the kind of statement that presidents need to make. So in that sense, the response has been adequate. I think his administration was probably deeply involved in everything that happened through the Treasury Department and everything that happened both in saving Signature and SVB, or at least saving their depositors, and in trying to prevent a bank run from hitting other American banks. But I think the main issue now is how much more will need to be done. And there's one big remaining question, which is, again, the uninsured depositors of these two banks have basically become insured, right? But what's uncertain about the language of the statement that Treasury and the FDIC and the Fed put out on Friday is whether the remaining, what if this happens to another bank? Are the uninsured depositors of that bank covered? We don't know yet. And so that remains to be tested. And as long as that question remains unanswered, I think there's going to be a lot of uncertainty in the financial system.
Yeah, there's a bunch of different directions just off of that I wanted to ask you because, normally my co-host Nick Savary would be on here and I could hear him already saying, well, you mentioned the social media part. So, and how many people in this digital age just flooded this bank to take out their money because they either heard word of mouth or, got tipped off that something was happening with this bank and it would inevitably collapse. Because of the age that we're living in, should we be afraid more of bank runs like this?
I think it depends on policymakers. I think that's, it behooves them to create firewalls that are preventative of this kind of situation. This is a new kind of test for regulators and a new kind of environment. And in terms of pointing fingers, there's like so much blame to go around. It looks like the regulation, you mentioned the Trump regulation, the Trump era deregulation, rather, that was kind of a watering down of the Dodd-Frank regulations when it came to these regional banks. And that may have something to do with it. I think there's going to have to be a lot of, soul searching about what actually happened. But what is clear is that SVB took positions that were clearly loss making and it had the time to get out of them, but it failed to do so. There was like mismanagement at a fairly high level. B, it's clear that the regulators were kind of asleep at the switch. The San Francisco Fed, it was the primary regulator for SVB, and the president of SVB was on the San Francisco Fed's board. So that doesn't look very good, from a conflict of interest perspective. And so, there's going to be a lot of analysis as to what went wrong. I think the issue now is that we're kind of in crisis mode and trying to make sure it doesn't happen again to other banks.
Quick break here. We are presented, as always, by Fresh Roasted Coffee. If you could see my screen here. Fresh Roasted Coffee since 2009. This Pennsylvania company has been delivering fresh roasted coffee. You can check out their website at freshroastedcoffee.com or shop them online through a bunch of different places. I'm going to read you something here. Nick, they roast the freshest coffee beans using the most eco-friendly roasting technology on earth. I happen to have a cup right here of fresh roasted coffee. I always record with it. Nick, why don't you tell the people, you're a coffee snob, why don't you tell the people why they should head on down to freshroastedcoffee.com and buy some of this amazing coffee.
First, Mike, let's talk about flavors. If you are a single origin kind of person like you and myself, they've got you. If you are a flavor person, they've got you as well. Flavor packs, individual items as well. And it's not just coffee, folks. You can also get tea. My wife's a tea drinker, so freshroastedcoffee.com's got her too. But more importantly, you can learn about the coffee. When you get to the website, there's a quiz that tells you what's the coffee that's best for you. Sumatra is my blend, and they got that one right. I can tell you that for sure. They'll do the same for you when you head over to the website.
FreshRoastedCoffee.com. Go to our episode description right now. There's a link right there, and at checkout, you're going to get a discount for this amazing tasting coffee. Head to FreshRoastedCoffee.com today. And now back to the show. Well, I want to get into that in just a sec, but I wanted to ask you first, because you were talking about uninsured versus insured, and obviously everyone has heard about this $250,000 threshold. If the U.S., in your opinion, Pedro, if the U.S. had only protected the bank customers per the FDIC guidelines of the $250,000, not the ones beyond that, what were some of the potential risks that we could have seen to this economy?
Uninsured depositors of all other banks with similar features would have, run to the teller or run to their phones in this case and taken their money out. That's the concern, at least, right? And so that was the issue, was to prevent a bank run from turning into a cascading, runs on different banks of increasing size potentially.
Yeah.
And so far it has stemmed the problem. The issue is that now we have a problem with a major bank in Europe, which is Credit Suisse. And that's led to a similarly violent market reaction over here with the sell-off in stocks and bond yields falling sharply. So, market moves have been very, very extreme, unseen in my entire career. So.
Well, let's stay on that for a second, because you were mentioning before about maybe what some of these other banks are going to do steps wise. What are some other banks either doing or probably discussing in the wake of SVP's collapse to avoid becoming this next bank to succumb to all of this?
That's a good question. I mean, one would hope that banks were taking a good look at their books and maybe using this new Fed facility that they've created that allows banks to kind of borrow at cheaper rates and gives them some liquidity for the next year in order to get out of some of those loss-making positions. But they're also probably hoping that maybe there's some broader legislation that insures all deposits, and then the fear would be that if that happens, would that kind of create an incentive for people to make poor decisions in terms of bank management in the same way that SVB did, is what people call moral hazard. Would that create moral hazard? And so there's a lot in the balance there, but it's opened up a Pandora's box of reviewing how exactly we regulate mid-sized banks. Because you have to keep in mind, SVB was a bank that I cover this stuff pretty closely. I don't cover banks, I cover the Fed, but I had never heard of SVB before this crisis, right? And yet the bank was treated as so-called a systemic bank, which means that it was its unraveling could have taken apart the financial system, which seems like a lot to say, but it's what's required in order to allow this sort of bailout process to take place. And so here we are.
Yeah, I'm so glad you said that, because I had never heard of this bank either until you mentioned it. So I want to stay on that front before I let you go, Pedro, because the average listener, even myself right now, who maybe has a large bank, Bank of America, Wells Fargo, let's give them some financial advice here. What somebody's listening to this program and they say, well, I don't trust banks. I'm going to take my money out of bank. What would you recommend the average person right now who wants to make sure they're a little bit below that threshold, or maybe they're a little bit above it, and they just want to make sure their money is protected? What should they be doing?
Well, again, if you're talking about the average, most people don't have that kind of money, right? Do you know a lot of people that have 250,000 in the bank?
I do not.
Exactly.
I do not.
I mean, the issue is that this was also for some people, in some cases, it was business accounts, and therefore you were affecting the ability of these firms in the West Coast to like make payroll on Monday. And that was the fear, that this was going to create like some huge breakage in the whole system of like payments throughout the country. That was also something they were trying to prevent. And so, but that's also a major concern, right? But it feels like, so there were probably some good actors that were bailed out, in the sense that there were the average worker that wouldn't gotten paid on Monday got paid because of this. But there was also probably a random venture capitalist who made a terrible bet but got their money back anyway. And so I guess we'd have to live with that in order for the system not to break. That's kind of where we're at.
Yeah. Well, Pedro, I mean, you do a great job covering this. Like I mentioned, you've been so many places, Wall Street Journal, Reuters, just covering a lot of this news. Thank you so much for hopping on the podcast with us, educating our audience. Go check out the FedSpeak podcast so you can read any of Pedro's work over at MNI Market News. Pedro, can't thank you enough for hopping on the pod. Continued success to you, and please stay safe.
Thanks so much. My pleasure.
Hey, thanks for watching the Can We Please Talk podcast. Whatever clip you just watched, we hope you enjoyed it, and we hope you stick around for some more. Subscribe to the channel. My partner's over here smashing the button. Come on, do him a favor. So hit subscribe.